The Hedgeless Horseman here. It's July 16th, 2024. First of all, thanks to the sponsors. Pretty good market day today for metals. Gold, I actually think, closed at an all-time high. Silver went up. The base metals didn't seem to show much strength today. Again, that's just one day. But yeah, so here we are, gold at all-time highs. And let's zoom out a bit. I mean, again, it's like I have no idea where we're going, except I know we're gonna go higher over time. But just that I probably mentioned before, I guess this was several months ago now. But like this kind of looked like this here. Oh, you have that, quite a few tops, kind of a severe correction, whatever. Maybe maybe we just passed this point and we're here or something. And the next year is actually going to be an acceleration. Who knows? Gold all-time high, that's all we need to know. The fact that the gold junior sentiment is bad right now is absolutely breathtaking. I remember the sentiment back in the bottom of 2015. I remember how hot the gold space was in 2016 when gold reached 1350. I was printing paper profits during this move. My portfolio went up 500%. Back then, I remember, it's like you were, especially when we got into a correction, you were dreaming about $1,400 gold, $1,500 gold. I mean, $2,000 gold, that was like a myth, if you know what I mean. It's like everybody's heard about, $2,000 being possible and all that. But it's like, it felt so far away. Because there's a battle only to, this is 1350, for example. Went above it a bit there. Here we have many tests and then it goes down. And this, went on for like 2-3 years. So like, imagine, it's like $2,000 gold doesn't feel realistic at all in the short term, not even in the medium term. Now we're up here, literally at an all-time high, and you can basically steal as much gold in the ground as you want. I sum it up here. First of all, it's fascinating that the Canadian junior market is so dead that it's even possible to buy gold in the ground this cheap, with gold at 24.70. This sums it up. A market does not get easier than this. This is basically, if I had to guess, I don't think there's ever been, at least in the most recent decades, any time that it's been more of a walkover to be a value investor, especially in the gold space. Because again, the gold majors, they have their reserve gold set at like $1,300-$1,400. It's at $2,470. In the case of, I was going to say, copper, for example, I think a lot of the majors have reserve grades around $3.6 per pound. So the price is higher than the reserve grade, but it's not almost, 100% higher, which is basically the case with gold. It's absolutely ridiculous. I don't think a lot of the copper mines make a lot of money at this price. So at face value, it's like, yes, copper mines right now, copper projects right now might not be worth that much, if not for, a KD or something, which is basically, printing money. But the sector overall, I don't think they make a lot of money. I think there's probably many that break even or actually has, a small loss. Now, I can't, quote any statistics on that, but like, I've seen some posts on Twitter, etc., about copper miners. My point is, silver, I think the silver producers are probably doing pretty good, especially the high-grade ones. I would imagine, I think Mag Silver is in production. Silvercrest, for example, I think they have around $2 billion market cap. But I gotta say, it's like the gold projects, because there's not a lot of good silver projects out there. Let's be honest. But you know, some probably make money on paper right now. But it's like in my case, I'm not too jumped up about silver juniors personally. Yes, I know they will have incredible torque, especially the producers, if silver rips and all that. But it's like from a good business sense, there are a few, I think, really good silver stories. I have Western Alaska. I have some private ones. Not too many, but they tend to be high grade, typically in the better jurisdictions. Gold, on the other hand, there are some good, really good gold projects out there. And we know from a full cycle perspective, it's easier to make money on gold. There's a lot more large gold companies than there are silver companies, because silver is just notoriously hard to make money on, because most of it comes from as a byproduct. So there's no one shutting off the silver producing mines when the silver prices are low. They just keep tanking because these copper mines, etc., just keep putting out silver because they don't care about the price. Gold is much more, primary gold mines, so they actually do shut down. And look at nickel, for example. Talked about this in the last video, I think. In Australia, BHP is shutting down nickel mines. There we're talking at face value right now. Most nickel mines don't make a lot of money. Most nickel projects are not worth that much. If they're primary nickel, there's a lot of polymetallic, and like some have copper and all that. So it doesn't mean they're necessarily unprofitable. But if you had a pure nickel mine right now, you're probably not doing too well. But again, as always, that's, from a cyclicality standpoint, perfect. I mean, that's when you're supposed to buy when there's blood in the streets, and there's blood in the streets in the nickel space. In that case, or from that perspective, yes, it's obvious. If one wants to be a contrarian, you should be long nickel and PGM juniors, and I think nickel and PGMs are gonna do well over the next few years, because they're doing so terribly right now. But as I also discussed, one thing is that, or the weird thing is, like, we've even bypassed the typical natural, somewhat rational cyclicality in the gold junior space. Because gold is at all-time highs, and the gold business is doing very well. This is when we're supposed to get paid off, if you know what I mean. We were supposed to have longed when gold was maybe around here, hated as hell, or any bottom really. And now it's supposed to be the big payoff. We took the risk, we bought it when the gold products were not worth that much, but we bought it as contrarians because, hey, we know the gold price is going to go up, we know the gold sector's value is going to go up, and we know then that the shares, the company, how much they're valued at, is going to go up. Now we have the unique, almost, I think, situation where, again, we're at all-time highs in gold. The gold sector is doing better right now than it's probably done for most of the years within this slide. I think they have higher margins and a higher free cash flow, the gold producers, than they've had for most of this time. Companies almost went bankrupt here. Here the cost creep was so large, there's like the majors didn't make much money. I think they make much more money now than here. If you look at a particular mine, I would think so. It's just the craziest thing ever. Risk is supposed to be, it's like, oh, you buy something that's worthless at face value, or you buy a producer that's bleeding cash because you think, hey, it's going to turn around. I think they're going to be along for the ride, or survive for the turnaround. Now, we can buy stuff, assets, gold assets, that literally has the very metal that is selling for $2,471 per ounce. We can buy that in the ground and it's priced like the sector is crap, no gold mine really works. I mean, again, look at the junior sector. The senior sector is one thing, the junior sector is another. The junior sector, the junior miners, they are primarily driven by retail shareholders. And we've had record low volumes. If you look at the institutional support, there's been a pretty good amount of financings. There's money from institutions. You see, we have seen McEwen and Pierre Lassonde and Frank Gustra, the billionaires have been plowing in, but they're not buying in the open market. They've been buying in placements. So they've been piling in. Rick Rule has been piling in. Retail, however, has not really bought anything for a while. That's the reason why we see this, that the seniors are somewhat, I think, fairly valued, meaning I don't see a big opportunity in the senior producers. Because it's not like you're finding, Newmont should be valued 150% higher than here. It's trading for, 20% of NAV or something. No, it's not. Some, trade at a premium because it's a bet on gold going up. But in the junior sector, where the retail people set the prices, I have never seen anything like this. This is basically like the tweet. This is as free money as it gets. I never, in my wildest dreams, would think that we would be here and I could still, we would be here and I could buy gold juniors at a significant discount. One would expect that the sentiment would be so high from an all-time high in gold that the juniors would be priced at a premium. I thought back here, if you asked me what do I think gold juniors will be trading at if gold goes to 2,470, I would probably guess 600-700% higher than they are actually trading at right now. Because I would think that they would be, priced close to NAV or NPV, depending on what the stage of the asset is, and probably with a speculative premium on top. Meaning that, a project worth $1 billion might be trading for $1.3 billion because everybody's hyped up and the momentum would be higher and all that. We see the opposite. It's the weirdest thing I have ever seen. Which also means that this has never been easier. Nobody has any right to call the gold sector or the mining sector hard. And I know that's gonna sound like I'm an asshole. It's like, well, a lot of the juniors are down. I'm sitting on 50% losses in some and whatever. That doesn't matter. It's the opportunity. Obviously, the opportunity is before you actually make the gains. We can't be talking about an easy market at the highs, for example. It's been an easy market. But here the risks are to the downside. I don't know what you would need to find in order for it to still be undervalued given how the sentiment was here. This was an extremely hard market. Because there's almost no way you're going to be able to buy anything that has an intrinsic value that was much higher than the share price, the market cap of the companies at this point in time. Back there, you probably had value here, you had price here. So it was a matter of when, not if, that you would go into a retracement. Unless gold just kept going, so actually value kept going higher and higher and bailed you out. But that's again, speculation in a sense. Now we have gold price here, the value of the business up here, and we have the juniors down here somewhere, around, let's say, $1,700 golds or whatever. It's the most insane thing I have ever seen. if you think you need to be a contrarian to buy anything now, it's like if you're a value investor, this would be, you would be jumping up and down. I cannot believe I can buy these gold projects that would be printing money at these prices. And I can buy them for 10% of what they're worth, 20% of what they're worth. The margin of safety is absolutely extreme. If gold went to 2,200, you wouldn't be overpaying. If gold went to 2,000, you wouldn't have been overpaying. If gold went to 1,900, you wouldn't have been overpaying. 1,800, you probably wouldn't be overpaying. 17, maybe, closing in. And of course, that's a, case by case basis. But this is absolutely absurd. We should not even be allowed to be buying in this sector, this market. It should not be this easy. This is the wildest thing I have ever seen. I never in my wildest dreams thought it could be this easy, ever get this easy. Again, back here, 2015, every gold project basically, except literally the tier 1 gold projects, were either worthless, probably worthless. Because companies some companies went bankrupt. Barrick had to sell a lot of assets to not go under. Yes, they had some mines that probably, were producing free cash flow. So basically they sold all that didn't produce free cash flow. But that's like, again, that's the top of the mines basically made any money. All the other ones were liabilities at face value at that point in time. That changed, however, of course, with gold going from 11 or 1060, 1050 to 1360. All of a sudden, many mines probably were making money, so they were not worthless anymore. And the ones who speculated on a turn, bought here, got paid here, handsomely. I got paid handsomely there. But the point is, down here we actually took risk. In the sense that, hey, I'm buying something that's priced like it's almost worthless. But at face value at that time, it probably was worthless. So we were actually at least being contrarian in a sense. We were at least speculating on the resurgence of the gold price. We were playing the cyclicality that gold never goes down forever, never goes up forever. But you had to take some form of risk at least. This is absolutely absurd. Absolutely absurd. It's basically like gold went, I don't know, like this or something, and the miners went down like that. Do you think it would be hard for me to have bought the lows of 2015 if gold was at 1900 and the companies were making money? Of course not. So, I mean, let's put it like, if you don't see what an opportunity today is, and it doesn't matter. I know how it's going to sound, or how some people will say, well, the juniors haven't done much yet. Even though gold's going up. So basically the price to value gap is increasing. Meaning that, if juniors were this cheap, and here's what they were worth, gold kept going up, let's say, so the value of the juniors went up, but the price went down or stayed the same. That's just an increasing value gap. But some people look at it like a reason to sell. That is obviously the gravest mistake you can ever make. There's nothing costlier than selling something that's extremely undervalued. Buying something extremely overvalued, at least you can only lose 100% of that position. Something that's extremely undervalued, which happens in this sector, one time here. When was the Corona crash? Was that here? Maybe here. That doesn't happen too often. It's like here, 2008, extreme bottom, 2015, 8 years. So maybe you would be happy to get opportunities like this every 8 years. And I'm talking about absolute valuation, let's say. In this case, as I said, this opportunity is much exponentially better than the 2015 opportunity. Because here you actually had to take a lot of, not a lot, but speculative risk. There was real bankruptcy risk. no project really was worth anything, so why would anybody build a gold mine here, because there were no gold projects that would work really. Complete opposite now. It doesn't get easier than this. If you can't spot that this is an opportunity, and the more gold goes up, and if juniors still sleep, the gold juniors, that's just an exponentially increasing opportunity. That is like, if it's you should, again, it's like, well, I can just speak for myself. I have never been this bullish in my entire life, I don't think. This is absolutely crazy. And one can't let that seed of doubt, like, well, they haven't responded yet, so it means they're never gonna go up. Something like that. Because I see people whine still about juniors, like, I hate this sector or whatever. It's like, if you can't spot that we're spoiled, it shouldn't be this easy. And you whine about getting the most absurd layup that's... again, it's not like we haven't had a layup. We had a layup for, I think, 2 years. It's just that it's literally gotten better and better. The layup has just gotten better and better. Sure, there's some that are off 100, 200, 300% off the bottom. So in some cases, people have already started to get paid. We can't forget about that. There's been some serious moves in some juniors off the bottom. And whoever bought those bottoms, the buys that were done around those bottoms, they're up handsomely in those. But that's not for every single case and all that. But make no mistake, if gold keeps on going higher, or juniors get cheaper and gold goes nowhere, it's like, that's just an expanding price to value gap. This is the most, and that's why I say that I just kind of look at crypto. As long as crypto is actually a thing that is around, and I mean, it's certainly a thing. Bitcoin is still, I think, 1.2 trillion. Ether is, I don't know, 300 billion. You have sand, whatever that is, Cro-Magnon. No, I'm just kidding. I don't know what this is. Doge, for example. I rest my case. If that still happens, yes, it's basically as a value investor, you never had an easier time. But the flip side of the huge increased bargain coin is that there's frustration as well. I understand it. I get frustrated because, like, you see something, it's like, you know how cheap it is, you know how dumb the market is, you know that it will go higher, maybe a lot higher one day. You know that's gonna happen. So you're sitting there, it's like, I don't get it. How can nobody, see what you're seeing? But that's the flip side of it all. Because it's got to be in some way frustrating. Because the whole reason why it's frustrating is because if you know something is so absurdly cheap and you're not making money on it yet, because, like, to you it's obvious. But if it wasn't so absurdly cheap, we wouldn't be frustrated, if you know what I mean. If the gold juniors, if the price of gold went like this, and the gold juniors, we bought them here when they were cheap and they've already surpassed fair value, yada yada, and we're at a premium right now, people would not be frustrated. People would be piling in because now they've seen people make money. Frustration comes obviously from poor performance. But the trick is, as always, it's poor performance that prologues huge outperformance, and vice versa. Huge outperformance, no one is frustrated, everybody's having a happy time. Huge, insane frustration, happy times, frustration, happy times, and all that. This is the gold price. Again, it's not that this is not indicative of the sentiment in the gold junior space. I'm just saying that you're not crazy. This is crazy. This is the most absurd situation I've ever seen in the gold space. This is like free money, and that's kind of what's even more frustrating, because you have these, you know about the copper long-term fundamentals and nickel and PGMs and what have you, and you see these juniors like they're given away, and yet you have this gold space where it's like, Jesus, not only are they cheap, gold is at an all-time high. So from a risk-reward perspective, I would say hands down, the best risk-reward is in the gold junior sector. And I've said this for quite some time. And gold has just gone higher, which makes it even more of a risk-reward layup. In the nickel sector, for example, it's like with Magna, I think they can make money around these prices because they, have such a high grade ore. But at the same time, it's like, if they go into production and, the cyclicality of nickel and PGMs and copper comes into play, whew, I mean, then it could be really fun. But again, then you have to wait for that payoff, the beta payoff, for the metals to go higher. Because they're not showing up yet in the cash flow statements, obviously, of nickel miners. We're not getting paid now, even if you knew the nickel price was going to be, I don't know, 50% higher within 2 years or something. But in the gold space, they're printing money right now when we can still buy it. So yeah, I mean, this is the most absurd thing I've ever seen. It's like I'm getting all worked up just talking about it. Now, this is as free money as it gets. I mean, it's funny when I look back, when you were in university or you started to dabble in stocks and stuff, and everybody said, it's like, oh, the markets, they're efficient. You read the CAPM models, and it's like there's no free lunch and everyone is a killer. There's a bunch of sharks out there. You probably need a fund manager or investment advisor and stuff, and you come and then it's like you get to see this stuff, and I'm like, what the hell is going on? That's the funny part. It's like you've demystified everything. It's like if you're a value investor and then you start to again see through the price of something and start to think about actual value versus price, and you're like, wow, never in my life did I think I would see a market that's friggin' stupid, depressed and stubborn. But here we are. So it's like, okay, those university courses feels like a big waste of time. It's like you get pumped with information that's like, you can't beat the market, there's no point in trying, yada yada yada. And you live to see what we're seeing right now in the gold junior space. And again, flip side of that is obviously the crypto space. If this can happen, this can happen. If we fast forward to some kind of reverse to the mean or reversion to intrinsic value, where would you want to be? The thing that survived every single empire, every single civilization, been around for 6,000 years, never went away, or something that someone came up with. How long is it now? I don't remember when it was made, actually. Was it 2009? I don't know. Let's say 15 years, whatever. I know what I'm betting on. The one thing with 5,000 unblemished track record, 5,000 years of unblemished track record versus something that's never seen a single monetary system collapse. To me, crypto is an unfathomably risky proposition, and opportunity cost when this exists is just astronomical in my opinion. Because they're kind of betting of something never before happening. With gold, you're betting for this thing that has always happened and never failed to not fail again. So gold has 100% track record for 6,000 years. Crypto has no track record. And you can buy said track record in the ground for 20% of what the actual business is worth. That should not be possible, but it is possible, and this should not be going on, but it's going on. So everything fits from that perspective. The day crypto is at zero, or 10,000 cryptos are literally at zero, then I think the market is really sober all of a sudden. But we're obviously not there yet. So until then, we have almost I don't know, easy rider time in the gold space. It's fascinating. It's like we're gonna have to remember this for the rest of our lives. I have not seen a market this inefficient. It's like you're stealing candy from a baby, literally. Because it's not that it's obvious. It's like you can literally see some of these projects. Like, here is what the economic value is for them. Okay, there ton of 1,000 hours of engineering work, yada yada yada. It's like, yep, at the current gold price especially, the value is up here. Yes, we know that stuff can go wrong in mining and all of that, but it's like a ballpark figure at these very prices at least. And it's like, okay, what can you buy it for here? Do you need to be a rocket scientist to see that this is much higher than this? I don't think so. In crypto, there is no margin of safety. It's just a greater fool trading sardine, or most of them greater fool trading sardines. And still people talk about cheap and expensive and whatever. It's just absolutely unreal. But let's look at some... Oh yeah. I'm gonna get to something later. But this is kind of interesting. It's like Homerun has actually, it's really been on a tear. Been one of the hands down biggest breadwinners for the last few months. If you remember, and this ties into how, in my opinion, inefficient, stupid, whatever the market is at any point in time, especially in the short term. So if you remember, they put out a news release that CEMEX LOI with CEMEX 21st of May. That was around here. Yeah, okay. Look at the volume there. The price opened at 83. Oh, didn't even open higher than that. Okay. 83, high of 84. So it went up 1 cent on that day. Closed at 78, touched, low 75. So it closed down on that day. And I made a big deal of this news release. To me, this was like what I've been waiting for, kind of. The proof in the pudding. It's like a series, because I don't know much about silica. I had to read up on it, double quick and all that. It was like, here you have a legit third party saying, we're going to sign an LOI. They're supposed to be, building a big solar plant that's supposed to be in production, whatever, 2026, 2027. And obviously I've described the inherent advantages of Homerun. So to me, that was a big friggin' thing. I went pretty big in the private placement, the last one. But when I saw that news release, and I thought about it, and it's like, Jesus, I mean, if there's a 20-30% chance that this turns into a legit deal, it's like this turns into a contract, a business, that this turns into reality. That could be worth a shit ton of money. And when I saw the market open, it opened the day before it closed at 82. So it opened up 1 cent, 1 friggin' cent after that news release, and closed red. So the market was obviously, again, let's go to what the market is suggesting. Nothing changed, nothing to see here. This actually decreased the value of the company with this LOI. That was, according to Mr. Market, the value went down. The reaction was, the price reacted to the downside. And I couldn't friggin' believe it. So I thought about it. Again, this is why it's like, in my opinion, you should assume that the market is always wrong. Especially if you're on the, let's say, the long side. Because in the sense that if you make some big, let's say, bold bets, the most you can lose is 100%. If you're right on something being, let's say, extremely undervalued, or the news being much better and much more valuable than Mr. Market is saying, much more, the market price is not reflecting the risk-adjusted value that you see, and you make a bet there going against, especially since, I mean, if you're increasing your shareholdings, you're increasing your exposure on a day that the market is down on that very news item, you're obviously contrarian because you're increasing your exposure. You're saying, I want even more of this. I think it's even cheaper now. It's more undervalued now. Whereas Mr. Market actually had, let's say, net selling in the sense that the market price closed lower. So it valued the entire business, the entire future of that company at a lower price. So you can be contrarian even though it's not a case where it's like this, everything is sucked and all that. I just called absolute bullshit on the market reaction. To me, that was literally a joke. So I started adding for real. And obviously now I'm looking pretty smart. But again, it's like this is paper profits. My case was built in my article, for example. It's like I do some crude calculations where it's like, hey, I think one could argue that like my base case ended up being around $8 per share. Do I know is that fair value? Obviously, it's not going to be exact fair value. It's going to be higher or lower than that, for sure. But just to get a sense, like how cheap do I think it is right now? How is the risk reward? To me, the expected value just shot straight up with that news release, and the market thought it actually went down, which was again absolutely crazy. So I went against Mr. Market. I added for pretty much every portfolio I could get a hold of that I helped manage. And now you have a nice paper profit. But that's not to say, I mean, fast forward a year, Homerun might be at $12. Homerun might be at $1. I don't know. I'm not taking anything necessarily to the bank because it's like, is the case over? Well, no. And now we've seen price go up. I mean, again, in my view, I could argue that, well, I think maybe a fair value is actually $8 per bucks. $8 per share. So in that sense, it's like, hey, I should be buying if I didn't have any position, if you know what I mean. And then it comes also down to position size, obviously, because my position size is getting kind of absurd in a sense. And I, of course, now would like to see even more de-risking news. So I could maybe, I mean, let's say you have if you thought, hey, there's a 20% chance of this being worth $1 billion in 2 years, and the expected value today is then 200 million, 20% of $1 billion. And they put out some news that increases the likelihood of some deal going through, or they announce a new deal with potential, stuff like that. And you're like, hey, now I think there's a 30% chance it could reach $1 billion. All of a sudden, that's 100% higher market cap. That would be really nice. It's even easier, obviously, to just hodl in that case. When you see this stair-stepping of value, and as long as price does not overshoot the risk-adjusted value, you could just hodl, basically. But my main point was that look through the bullshit of the market, especially in this sector right now. Retail has no idea. Most retail don't have an idea. They don't have a strategy. What was I going to say? Yeah, and everybody's basically guessing what the share price is going to be tomorrow. And if it's down one day, they think it's going to go down the next. If it's up, they think it's going to go up the next day. And so on and so forth. So I don't dabble in that. It's like I've said before. I want huge, let's say, spectrum of outcomes, or preferably with margin of safety. But it's like if I think, hey, I buy Homerun, let's say at $1, and you're like, Homerun could be either worth 0, that's theoretical, but it could also be worth $20 per share. How often do I need to be right? And then, of course, it's like, okay, if the reward side is that high, and it could be $5, it could be 10, 15, 20, whatever, it could be more than 20. In that case also it's like, okay, then I have to hold it for quite some time. And I can't sell everything on a double or yada yada. I have to capture that reward side of the high risk, high reward trade. How do I do that? Obviously with some holding period. Obviously by not, again, this is not a exploration play, but it's like, a typical exploration play, which I've said, oh, I'm taking this huge risk on a maiden drill campaign. Let's say 1 in 10 actually make a significant discovery. The one that does make a significant discovery hole, that ends up being a discovery, you make 100% on that on the first day of the ASI announcement, the discovery announcement, and you sell all your position. So if 1 in 10 delivers a double, obviously you're going to lose money on that. You can't take high risk and you can't run a high risk, low reward strategy. That is absolutely insane, mathematically dumb, obviously. Another one that's actually kind of in the same line, on the same line, Goliath, this was, I think, was it 2 days ago? Okay, no, yesterday. So Goliath put out a news release. Goliath discovers new deep mothership feeder zone at 645 meters down hole containing abundant visible gold in first drill hole of 2024 at Shorebed Golden Triangle. System remains wide open. So this is already, I think, one of the best gold-silver discovery stories, especially in Canada, the last couple of years. So I think, again, without hitting some kind of potential feeder source or anything, they have plenty of targets. The systems are wide open. They have several shoots and all of that. They have the whatever Golden Gate and the Shorebed upper, Shorebed lower, yada yada yada. They have a big land position. Let's see if they. Well, they have a very large land position, and here you have other targets: Full Contact, Treasure Island, Jackpot, Shorebed, and they're going to be testing them. So I think Shorebed itself is going to grow. I think the Shorebed could have several million ounces AU equivalent. So I think that's going to be a multi-million ounce gold system. This is like, because, and if they show that, if that happens, it's like legit, workable grades and all that. It's like, hey, we have a new multi-million ounce underground mine in Canada. I mean, yeah, what could that be worth, especially at today's gold prices? I mean, a lot, I would say, not even close to where the current market cap is. Then this, by definition, kind of becomes free optionality upside, free optionality upside, free optionality upside. And then you have also the feeder potential. Okay, so now they have hit something at 648 meters of depth. We don't know what it's going to run, but there's visible gold and all that. So that tells us at least that this is very much wide open. There's probably plenty of mineralization to drill up yet. I mean, again, this is the first hole. It's not like they did a carpet bombing campaign and suddenly found. No. If they hit something on the first hole, where they're drilling somewhere they haven't drilled before, that should be very much taken into account based on the balance of probabilities. This might be just simply very robust, which Shorebed has already shown is a very robust, pretty predictable system and all that. So, are they going to find something at depth? Is there going to be a porphyry and all that? Who knows? I mean, I'm happy with just if they just drill out the Shorebed, Bonanza, Golden Gate and stuff. I think you'll have a very large gold silver deposit, and they have some base metals too, in BC Canada. It might be a relatively rare, very large precious metal project. That's without any sources, or that's without hitting on any of the jackpot targets and whatever. But the fact that they actually hit on the first hole they drilled, and I'm not assuming that this is going to be a monster hole or anything just because you have VG. There's holes with VG that doesn't run that much. I think, what is it signaling? Strongly mineralized veins containing visible gold, yada yada. Yada yada yada. Closely spaced quartz sulfide veins, blah blah blah, chalcopyrite. So it's like, what it tells us at least, and there's not more slides here, so it's hard to totally geolocate where they actually hit and all that. But this looks to be another mineralized zone. Simple as that. Or actually getting closer to some kind of feeder system. So is this bad news? Of course it's good news. In my opinion, I think Goliath is already cheap just based on if they hadn't hit on this hole. If they don't find any source or whatever, any source at all, they just drill what's probably there based on what they've already drilled. I think they have a company making discovery already. One of the better ones in Canada. This is free optionality. They hit. The story just got better. What did the stock do? I think this was yesterday. Yeah, okay. So yesterday. The close before was 99. Opened up 106. A bit higher. And I started reshuffling a bit. I added some to Goliath, added for myself, family portfolios, because again, this was just a story that just got better. Blue sky increased, probability of further success increased. Story got better. The odds of this being some kind of absolute home run, I think, increased. But that was met by selling. The low was $1. I think I picked up even more at 1.1 or something. So again, the market's first reaction to an obviously positive news release. Same case with Homerun. The close was 103, so almost a nothing burger. And for a while intraday, it was basically a nothing burger. The stock might have been up 1%, something. I mean, something ridiculous. Like nothing at all actually changed. It's like, are you freaking kidding me? Nothing at all changed when you hit the hole like that on the first try, looking for a feeder. Yeah, okay. Good job, market. And today it's up 15%. So again, imagine, I don't know if this was gap trading or something, because I've seen that in a few. I think the same thing happened in Homerun. You have like people talking about these gaps. It's like, bring on all the gap traders. Man, are they subsidizing every longer term investor. Man, are they. So they drive a stock down on obviously positive news, so they get their whatever 5-10% quick fix for a day. And I can buy it as like at an unchanged price, or maybe lower than it actually closed the day before on obviously positive news. News that might be worth, who knows, 20-30% of the market cap or something like that. Sign me up every time. That's just free risk-adjusted money, because there's so many traders. And of course people are going to look at the reactions like, oh, nothing changed, obviously. Maybe I should sell actually. I won't be buying because the market doesn't like it really. Okay, congrats. Now it's up 15% the day after. So it's like the market is starting to make some sense out of it at least. But it's just, I'm telling you, it's just absolutely crazy how fucking dumb this sector is, how it trades. It's absolutely mind-blowing. And you have to see through that bullshit. You have to go with the common sense. First of all, what do I think the company's kind of worth? Okay? If you think it's cheaper than what you think it's worth, I mean, it's some kind of a buy at least. We of course want the cheapest one, or most undervalued ones, or at least the ones with best risk reward. They can be low risk and decent reward and all that, or high risk, but then we want high reward. But still, you see stuff like this, and it's just absolutely crazy. It's like, how can we be complaining about a sector that just day after day just hands out free risk-adjusted money? And of course, it's like, who knows, okay, what might have played into that? Are people waiting for a private placement? Yes, we've seen that and that's also one of those ridiculous things. You saw that in Western Alaska. Someone drove the stock down to, I don't know what kind of market cap. Absolutely ridiculous. And then a private placement happened. And now it's up, I don't know, 60-80% or something. But it's just absolute moronic bullshit by Mr. Markets. And that's traders. It's typically... Well, I should say this. The short-term investment horizon and the gap traders and the whatever traders, they run the market on any given day. But they are also the one that we are preying on. If somebody drives down a stock, an intact story, way more than it should, just because there's a financing coming up, yes, it's going to hurt on a paper, whatever. But if you get the most absurd buying opportunity thanks to that, sure, your initial position, you might be down 50-60%, but maybe the case is 6 times better than when you bought it, simply because price went down that much. And you load up and you load up and you load up. Placement happens, whatever, or you're in the placement, let's say. You might end up making more money on that story thanks to this friggin' sector and everybody's so afraid of financings. That's the fun part I've seen. People talk about this. It's not that dilution is not important, but it's like, Jesus, I mean, it shouldn't hang on. It's like, you see some, it's like, 5% more dilution, then I hope. It's like, if you need a 5% margin, I mean, that's like, 5% more dilution, then it's a bad case. Then you don't even have a good case to begin with. There are exceptions and all that, but I hope you get my point. It's like everything that everyone else focuses on, if there's a bunch of gap traders who do gap trading things, okay, the stock opens up on good news, somebody sells it down, sells it short, whatever, and other people join because they think the gap is going to close. You cannot ask for a better development than that, because it's almost in that case kind of like having been an insider. If traders bring it down so you don't have to pay for the positive news they just put out, they created maybe an enormous opportunity for you as a longer term value investor. They are subsidizing us. And yes, in the short term, especially if you have a full position, I understand it can be very frustrating. It's like, it's obviously good news and all that. But the silver lining in that, again, is that if it's frustrating, it might mean that an even bigger opportunity presented itself. And I don't know what it is about these Canadian markets, why retail, I mean, I'm not going to say dead, but it's getting a bit better though. But still, I'm just dumbfounded. It's like Canada's supposed to be the capital of mining, and it's like, you look at the valuation, it's absolutely crazy. And then I go to Sweden, for example. This is Botten Exploration Holding. Near, I was going to say multi-year highs, but it's like, it's at what, around 52x highs at least. This is a gold developer. They have 111,000 ton grading 8.5 grams per ton AU and 85,000 ton grading 5.9 grams per ton. Not million tons, 1,000 tons. Last I did a calculation, if I remember correctly, I got it to around 30,000 ounces. 30,000, not 300,000, not 3 million ounces. 30,000 ounces. Less than most mines produce in a year, even small mines, or relatively small mines. They have a market cap of 500 billion SEK, which is around 50 million USD, which is around 65 million CAD. Sure, they're about to go into production. But again, their resource is 30,000 ounces. They have a 65 friggin' million market cap with 30,000 ounces. Even if they had 100% profit margin, if you count the taxes and whatever, it basically, you wouldn't even get your money back. It's absolutely insane. But the Swedish markets are doing very well. Swedes love mining stories, at least sometimes. But that's just to show. Imagine what this would be valued at in Canada. I don't think a lot. But Canadians seem to love Canadian plays. They get the premium discounts. Even with the same project, if that was anywhere else, let's say, typically it gets a premium because Canadians are, whatever. homesick, no, but like, you know, patriotic in some way or another. It's like, I can understand that. It makes sense. It's cooler if you invest in something that is in Canada and all that. But that also obviously opens up opportunities for stuff that's outside of Canada but listed in Canada. In this case, this is Swedish listed. It's a Swedish gold project. Swedes prefer Swedish gold projects. And this toy mine has a 65 million Canadian market cap. That can give you a sense of what like could happen in a good sentiment environment. Because at face value, there's no reason why this should be valued at 65 million, but still it is. At the same coin, or other side of the same coin, there's no reason why crypto should be where it is, and no reason why the gold juniors, the good ones listed in Canada, should be as cheap as they are. It's sentiment. People just don't, retail just don't feel like buying, or they do feel like buying. And that also brings me to First Nordic. And I talked about this yesterday. And here we have, in my opinion, a similar thing happen. You have the second largest gold miner in the world who doesn't like to branch out. They typically stick to their areas because they are, as they say, a regional gold company. What potential do they have to see for something to... first of all, they are at, I think after today, a $52 billion company, and they're regional. So they are probably the pickiest gold major in the sector, because they're not, as they say, global. They want to stick to their production hubs, and plus they are the second largest gold company, so they have the second highest requirement what a project should be worth to make it worthwhile. Again, a $1 billion project. If something is worth $1 billion, that's nothing to Agnico. Even if they only went up like 2% today, the stock, they added $1 billion in market cap. $1 billion is 2%. That is nothing to them. Or it's a small amount. Let's just put it like that. $1 billion, like nothing to them. So they make this investment in First Nordic. They pay First Nordic $8 million. First Nordic uses that to acquire the Oijärvi, and voila, Agnico has its exposure to First Nordic. The stock opened up a bit. Traded up a bit. What was the closing price? Let's see. Closed at 39. It opened at 41. Is that a big jump? When you have, again, the pickiest and second largest gold company is saying that we think you have potential that interests us. And you know, it's like, okay, these guys need $2 billion in value, at least, for something to be worth their time, worth their while at this point in time. The stock is at 75 million. It goes up a few 6%. I don't remember exactly. What happens then? It's like, trades down, trades up. It actually was in the red. I'm going to go back to this. Same thing that happened in Goliath. Goliath opened up more. Goliath opened up like, 6, 8, 10%. Traded down to neutral. The market saying this was a nothing burger. The day after it's up 15%. That's kind of the reaction. It's like maybe minimum, again, because it's already starting off so cheap as it is. And Homerun. Massive potential. It's like, okay, a deal, LOI, wow, there's some huge potential here. Not that it's take in the bank or anything, but like if you put a 20% chance of that deal going through, huge for Homerun. Huge for Homerun at whatever market cap they had. That ended up red. And here we are. The third example, which is very noteworthy. Huge vote of the best vote of confidence a gold junior can probably get, which is Agnico. Yes, Newmont is a bit bigger, but Agnico is the smart money of the majors and the second largest, bigger than Barrick, smarter than Barrick, and all that. You cannot, as a gold junior, you cannot ask for a better stamp of approval in terms of quality and size. Well, size, I guess Newmont could be better, but like combined, you cannot get a higher quality stamp of approval that you guys have potential. We like what you're doing. We like the whatever jurisdiction, etc. Then Agnico Eagle. That happens. The stock is unchanged. Does that make any sense whatsoever? No, of course it doesn't. It's been cheap before Agnico came in. It's been cheap for probably the last, I don't know. I mean, given where go, it's like I said in the forum today. It's like people, and I've seen some say it's like, I'm waiting for a dip and all that. I never played that game. I never played the I hope I get a dip. If I need a dip to buy into a story, I don't have a good case. Simple as that. If I need a 5 or 10% lower price for me to think that this is a buy, then it's not a buy. If it is an obvious buy, I don't need a 5 to 10% discount. Again, speaking for myself here. And I always, let's say, quote, buy too soon or whatever. But that has worked for me since I started out. If something is cheap, I just start buying. If it goes down, I buy even more. That's the only thing I do. I do not try to be cute, getting the next 10% move correct or anything. It's the same with First Nordic. My base case, my base case is actually even more conservative. But at $1,800 gold, I got a crude estimate of value to be like, I can't even see it. 1,073 million, I think, and 45% of that is 483 million. Fully diluted share, that's 2.14. Fully diluted upside, that's 363. That's just based on an 18. If Barsele was in production at $1,800 gold price, and we had 45% of it, no additional ounce discovered at Barsele, no additional discovery at the 100% owned ground. So again, in my opinion, First Nordic is probably the cheapest gold junior I know of. It's the cheapest gold junior I know of. Maybe the cheapest gold junior I have seen. The risk reward to me is absolute. The risk reward is absolutely crazy. It's like worst case scenario, we have a 2.4 million ounce mine. That's looks to be a really, really good mine. So it's like worst case, we have 45% of a Nico drilled mine, which is obvious, at least at these gold prices, as you can see, it's like, at spot here, $2 billion. 45% of that is 971 million. We're at 75. Well, if you count the dilution from Agnico, let's say, I don't know, 85. That's obviously, we're not even close in that case to what the value right now would be for the Barsele deposit as it stands now. And I don't know about you, but I think Agnico appreciates the huge anomalies. I wrote that somewhere. Oh yeah. It's like if people think, and this happens a lot of the time, you have to train yourself not to think like that. People think that, I should have bought that, whatever, let's say 20 cents in April. I missed the move. It's like, I should have been buying. It's up 100%. It's like, I'm a chump if I buy now, for example. People, whatever. What has happened since it was at 20 cents? Mark Legault, 34 years working with Agnico Eagle, and Johannes Holzäpfel from EMX joined the board. Hello, stamp of approval, anyone? Massive soil anomaly at Storjuktan. Several large anomalies at Påbacken discovered. Company cashed up now. Agnico Eagle invests, and with it we get 100% ownership of Ojärvi. Do you think that maybe the risk-adjusted value of Barsele went up a bit more than whatever the market cap went up? Yeah, I think so. These are huge anomalies. You can look at some gold juniors. Take Canada for example. I mean, they'll be talking all day if they find a 2-kilometer soil anomaly. We have I don't know. We have like 4 or something. One is 5 kilometer. Those are massive targets. With those massive targets, I can understand how Agnico sees this and says, "Ooh, we have no exposure to those targets." And Barsele, even if it gets to 5 million ounces, which I think is likely, or 4 million I think is very likely, maybe 5, maybe more, it's like who knows, but still, even at 5 million ounces, it might be too small for Agnico. Because it's not going to be a high throughput mine, it's an underground mine. Maybe it produces 170,000 ounces. Maybe Agnico needs 400,000 ounces. So basically it could be a flagship asset for a mid-tier, let's say, worth a lot. At 5 million ounces, it's probably worth, well, at this price, it would probably be worth, I don't know, yeah, 2 billion plus. I mean, it's 2 billion right now, according to my calculation. So, a lot, but still maybe not big enough for Agnico. But with 100 kilometers of strike, basically an entire greenstone belt with 4 large-scale multi-kilometer soil anomalies, I think Agnico sees, hey, if you find one additional Barsele or half a Barsele, and Barsele gets to 5 or whatever, we could be looking at 7-8 million ounces plus. I mean, if they find something at all targets and all that, I mean, again, the spectrum is huge. They could end up making no discoveries. They could be making discoveries at all 4 soil anomalies. But obviously, I think this is, again, a sign that Agnico says, hey, we're a regional player. We need really, really large projects for it to be worth to move the needle for us, unlike a mid-tier. We need 2 billion minimum, let's say. I think with what First Nordic has in terms of exploration, I think Agnico sees that. This could actually become a gold camp. That's what Taj keeps saying. He wants to prove that this is a gold camp. Then Agnico could buy an entire region. If we make, I don't know, 1-2 discoveries or something, and Barsele gets proven up more, and there's like, again, 7 to 10 million ounces or maybe even more down the line, that's going to take time, obviously, but can you imagine the price tag? And it's like, yes, that I think would even interest Agnico. If they have like, hey, okay, we're getting like 100,000 hectares, we have 2-3 deposits here, and they're still open, whatever. Yes, we could be here for 20 years, 30 years. We have a new region to play with. So when you see stuff, when you see the highest form of stamp of approval a gold junior can ask for, and the share price doesn't respond, huge volume though, and note that there's warrants being accelerated. So we have no idea who's selling. There might be people selling because they're gonna buy the shares back in the through the warrants and all that. So probably some is like forced selling and all that. Still, I would think that the market should at least be rational enough to A, understand just how grossly undervalued First Nordic already is. B, appreciate what the signal value is for Agnico. Agnico even put out the news release. Agnico Eagle announced a subscription for common shares of First Nordic. Do you know how many people follow Agnico Eagle? Do you know how many people respect Agnico Eagle, think they are the smartest gold major around? So if they see Agnico Eagle invest in some gold junior in Sweden, do you think they might care to, look into it? Because again, there is no higher stamp of approval, and the whole sector reads these news releases from Agnico Eagle. So we have no idea how many people today found out about First Nordic. But will they just see a news release and immediately jump in? No, it might take days for them to do enough due diligence and appreciate it. It might take weeks. They might be so big that they can't even buy in the open market. They might need to wait for a private placement. My point is, again, like with Goliath, that's a one-day delay reaction. Homerun, I think, if I remember correctly, several days. And it's like, look at this entire move. Since the CMEX news, yes, they've had some news out actually, but I think that was probably the most material one. And the market is still repricing Homerun. And that big one was released in May. So again, forget about the market being efficient. Forget about that. And start to think, believe your own eyes, believe your own common sense. And then just accept the fact that if you're right, it might take the market days, weeks, months, or even years for them to see what you're seeing, and then you will get gradually the payoff. So I see, it's like, I started to see this much more than I would think should happen, let's say. Because we're getting second chances all the time, if you know what I mean. Homerun didn't trade up on that news. A joke, I bought it. Goliath traded down to almost neutral. A joke, I bought it. A joke, I bought it. First Nordic today, I already have a nosebleed position, and I actually added a bit. It's like it doesn't make that much of a difference because my position is that big, but still, I cannot help myself. It's call it spite buying. It's like if the market decides to be this dumb, I'm just going to end up making more money on its mistake. Some of those things I actually do take it personally, because I refuse to believe that this is what capital markets should be like. Where's the efficiency? Anyway, but that's obviously, again, without that, I wouldn't be beating the market, if you know what I mean. So all the things I complain about the market being dumb, for example, I mean, that's kind of what we actually do want. We do want this huge value, we do want this huge price to value discrepancy in especially the gold junior sector right now. That's why this sector is easy. Without that, if value was here and price was here, not much of an opportunity. If it was here, it's a matter of when we're actually going to lose money on all our positions. You know what I mean. So it's a good and bad thing. But it is what it is. So again, I know the trading saying is the market is what is right. My go-to or my basic view is the market is always wrong. Because it pays more in case I am right. And if I assume the market was always right, how on earth would I even find an opportunity? Because if the stock goes up, you think the market is always right, but, well, it's already gone up. So what is it right about, if you know what I mean? You can't even capture an opportunity, and by definition there wouldn't even be opportunities. That makes no sense to me why one should have it's like your default view on the market is, well, there's no way I can beat this. Now I'm going to go out stock picking. How the fuck does that make sense? I don't know. It's like, I don't know, going up to a pretty girl and it's like your main assumption is, well, there's no way she's going to like me. Yeah, then it's probably going to go really well. Relative to you walk up there and you think you're the king shit of Third Mountain, for example. You get my point. It's like if you start out with that bullshit, how does that gonna help you? You're just gonna see ghosts everywhere. Oh, the price went up. Now I'm right. I'm gonna buy more. Oh, price went down. Oh, market is right. Now I'm gonna sell. It's like, yes, there's a whole graveyard of people that follow that approach. They're not around anymore. Yeah, so consider me biased. I own shares of not all companies. I don't own shares of Botnia. I own shares of, which stocks I own shares of probably. So consider me biased. Some are banner sponsors as well. I think I don't remember if I talked about any current banner sponsor, but still, just consider me biased, okay? Make up your own mind, do your own due diligence. I don't share your profits or your losses. I'm just, again, giving my 2 cents here. Don't invest money you cannot afford to lose. This is not investing advice, etc., etc. Yeah, and as always, like if you don't see never buy a stock just because I own it or I like it. If you don't see the case, again, the market is going to prey on you. If you don't see why it's cheap, what you think it's worth, where you think it's could head to, if you don't have any sort of compass, you're going to be rudderless, basically. If it goes down, you don't know what to do. You're going to think that the story went south. If it goes up, you're going to be even more happy. And you're just going to buy because you think it's going to go up the next day with no concept of, hey, long term, should I make money or not on this? So remember that stuff. Thanks for listening, guys. Bye-bye.